From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for April the 11th, 2017. Today we're going to be taking a look at the AUDUSD, the Australian dollar, versus the US dollar for today's trade analysis. Got a couple of things going on here on the daily time frame. We've zoomed way out so we could see some history for this currency pair. I want to look along the green shaded area close to the middle of the chart. If you follow it back in time along the blue circles, I put the blue circles there to make it easy to see. The last time we were here, we found support right around the green zone, and by the way, right around the 100 period moving average. We come back a little bit further, there was some more support on the second blue circle to the left from the right. Then we see some resistance here, not too far, a little smaller blue circle, some resistance here, and even on the far left-hand side of the chart, we see some resistance into that green zone around the last blue circle. So we know there's been resistance under the green zone. We know there's been even resistance under the moving average. We've seen support on top of the green zone and support on top of the moving average. So we got a couple of things there lining up around this green shaded area, happens to realign with right around the 7,500, that 00 level as well. So a couple of things lining up around 7,500 with historical support and resistance and the 100 period moving average. One last thing that I want to point out here is we look at Fibonacci from the lowest low on the chart all the way down here at the very bottom. Fibonacci from there to the highest high on the chart. So Fibonacci low to high puts the 382 Fibonacci retracement level right around 75.25. That sits actually just a hair above our moving average and our green shaded area. So we're currently underneath the 382 fib of this previous trend range. And if the market stays underneath that 382, we might look for it to continue down to the 50% area, the orange shaded area, or even the 618, which is the blue zone down here in towards the mid to upper 7,300s, the blue zone all the way down here. So there's some Fibonacci also aligning with our colored shaded areas that we see here on the chart. Zooming in one time here on the chart, and you can see, let's go in twice. You can see the trend line. This has been the trend for the past couple of weeks. We've been in a downtrend here for the Australian dollar. So all in all, we're looking for this to continue the downtrend as long as it stays underneath the moving average and the green shaded area. The key point is it needs to stay underneath there. If it breaks above this, back above the green zone, the moving average, and even the 382 fib, we could be looking for reversal, and even the black trend line, we could be looking for reversal. But until that happens, we have to make some assumption that the trend, the direction the market is going in, will continue. If we're going to sell this in the direction of the trend, we want it to go up a little bit. And that's what it's done yesterday and today. Found the low, it came back up towards the green zone, so it gives us an opportunity at least to go short with lower risk and higher potential reward. Well, at this point, my stop loss would be just above the green shaded area. That way, if it gets above, I limit the impact to my trading account. So all that to me points to going bearish and looking for the right opportunity to do so just around the 75 to 75.15 level, which is the entire green shaded area, 7,500 to 75.15, anywhere within there. So I have yesterday, of course, added on the trade at 7,500, the bottom of the green zone. If you didn't do that, you could add it closer to the 75.10 level, and that would get you a little bit better price than what I have. Actually, this is an add-on position for me. My original position is all the way up here at the purple zone. When we broke under the purple zone, retested the 75.85 level, I actually got in all the way up here in the middle of the black trend line. So that was the original entry, and you can see that going down here. I have one lot left on that entry from the purple zone. So actually this trade for me is an add-on position, but if you didn't get into the purple zone and you're not in it originally, this gives you an opportunity to do so. Take it down to the 4-hour time frame, and again, doesn't really change it. We saw the market push under the purple zone, settle out underneath it. That's where we got in the original sell. It broke the yellow zone, settled out underneath it where the black circle is, and then made a new low, and now we've broken the green zone. Now we're looking for a resumption of that pattern where the breakout, resistance, congestion, breakout, resistance, congestion, breakout, resistance. Now we're needing the market to start working its way back in our direction. If it doesn't, like I said, the stop loss should be placed just above the green zone. That way you limit the impact if the market decides to do something different than it's done through the rest of the trending pattern and go back up. We also have one last clue here. Forex Black Book is red. That also gives us a little bit of a bearish bias. We don't have a new signal yet for the Forex Black Book, but I would anticipate the longer it stays here in the green zone, in any bearish movement at all, may give us a new red or yellow sell arrow for the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.